and welcome to another edition of Office Hours with myself, Steve Gomez, and your host, Jamie Hodge. Hello, Jamie.
Steve, how's it going?
Good. Our marketing director, Scott, is on the road today, and I'm going to fill in and be not only Jamie's sidekick, but kind of the moderator here to launch this webinar. So, again, this is a webinar. Everybody's microphones are muted. If you have a question, feel free to send it in to the questions box. First off, let me just detach that questions box like Scott always does and make sure that everybody can see and hear. You just type in that question box. We see and hear you. All right. I think Jeffrey, thank you very much. Jeffrey David, Jeffrey again, Randy, Andrew, thank you. All right. So this is the Monday office hours. Before we get started, we like to do a little bit of a poll to find out what the demographics are here in our webinar. So you'll see in a moment here, I'm going to ask the first question, are you a TI subscriber? And I've never done this polling before, so hopefully it's intuitive. But I know from listening to Scott that we should wait until we get about 40% of the responses, and we're doing just fine there. Keep it coming. And a couple more votes. For the most part, most people have a subscription, but still need a couple more people to vote to get a quorum. All right, I think we are there. Thank you. So it's basically 2/3 yes, I have an active subscription, and 1/3 I do not have an active subscription. Now speaking to just the people that do have the subscription, the 2/3 that are in the room, the next question is, do you have the TI Pro, which is the standard basic, or do you have the TI Premium, which includes odds maker, backtesting, and AI? Let me launch that poll question. And as soon as we get these poll questions out of the way, we'll get started. Again, TI Pro would be the standard version with the basic scanners. And TI Premium is going to include AI Holly, odds maker license, and price alerts, things like that. Need a couple more votes, then we'll get started. All right, for the most part, it looks like 60-40. 60% of you have upgraded to the premiums. Good to know. Thank you so much. So back to Jamie's screen there. You should be seeing Jamie's screen. I'm going to turn it over to him. I will also have some content to bring in as well. For those of you that can't remain in the entire webinar, the record button has been pressed. The webinar is being recorded and will be uploaded later this evening, barring any contaminated file issues. So thanks for showing up. I'm just going to turn it over to Jamie, and let's take it from there. Hey, Jamie.
All righty. Hopefully everybody can hear me. I'm pretty sure I removed the mute button. So welcome everybody to another edition of the Office Hours webinar here. Today's May 15th. About halfway done through May already.
Actually, so let me show you the screen. I'm sorry.
No way.
I took the hide. There we go. My bad. See, I am a newbie at this. Got it. Go for it.
Perfect. So everybody can see old Albert now, hopefully. All right. So once again, welcome everybody to another edition of the Office Hours. Before we get into the fun stuff, just want to take a second here to make sure the lawyers don't have a heart attack. Just want to make sure that everybody knows that the information that we share with you here today, as in all of our webinars, is strictly for educational purposes. This is not a solicitation to buy or sell any securities or anything for that matter. So if you do need investment advice, please seek out a licensed individual for that type of stuff, and they can be happy to provide you with recommendations and all of that financial advice. So everything here today, educational purposes only. All right, so before we get into the itinerary, just want to take a brief moment here to let the newcomers know about the community that we have here at Trade Ideas, because it's not just the award-winning technology that makes us so good. It's the community that we have built and are continually building around it That community really all starts with the trading room, which is hosted by Barry Anderson. Barry usually opens the room about 30 minutes before the open and is pretty much there all day, along with 500-600 other traders on a daily basis. And so if you have not been taking advantage of that resource, by all means do it. And the good thing about it is it's free. You don't even have to have a Trade Idea subscription to take advantage of that. So if you have not been doing it, do yourself a favor, get on over to the trading room. And of course, we're hosting 4 webinars a week, Monday through Thursday. Today it's me and Steve. Usually Steve is doing the Trade of the Week on Tuesdays. However, since he is taking an adventure to Chicago to go talk about a bunch of trading stuff with a bunch of high-frequency trading gurus, he's going to be out of the office tomorrow. And Steve, I think that one's just going to be canceled.
It is. Yeah, the Trade of the Week is canceled. There's no webinar tomorrow.
All right, perfect. And then on Wednesdays, we bring in the CEO, Mr. Dan Merkin, along with our CTO, Brad Williams, always entertaining. And then Andy rounds it out on Thursdays with the Trading Studio, and I ride shotgun with him. So come one, come all to the webinars. Take advantage of that trading room. All right, so today, I tell you what, Steve, you just flipped it over to me, but how about I just flip it back over to you real quick, let you do your thing.
Sure. We'll talk a little bit about what's going on here in the market.
Yeah.
Show my screen. Okay. SPY is what we've always started off with. So, you know, the story continues for those that pardon me?
I was just saying, Steve, it's kind of like deja vu. We've seen this set up before.
Yeah, it's almost like a recap of what happened in the last few episodes, going back here, looking at this wedge breakout. I just want to highlight with that one big giant move we had through, and then always closing above that wedge, always closing above this resistance level, which is now support. S&P's put in a nice, boy, look at that. Almost put in a brand new high today and settled right about at old highs. Go ahead and mark that up. It's worth marking up here. If we look left, we can see that was the prior resistance. So, hey, the path of least resistance continues to be up. Tons of these spiky, long bottoming tails that we see where the buyers just continue to pop in here occasionally. We've had a couple of down days, but, you know, it doesn't take long before the buyers just step back into this market. And the S&Ps are the most broadest. When we look at the Qs, we have continued leadership. Once again, here's another nice bottoming tail last Thursday, Friday, and then today. Just no end in sight for the train that's left the station that we're calling the Q. So again, all-time highs, never been this high before in the NASDAQ. S&P pretty much went to new highs again today. Looking at the Dow, though, we're still, you know, kind of under a little bit of pressure. We haven't gotten back to prior highs. And then the IWM, which of course is the Russell 2000, just really cannot seem to get out of its own way. I know a couple of really good, decent traders personally and on Twitter that have been trying to buy this support level here on this IWM level, but they just can't get any direction or any traction. So IWM still bringing up the rear. The Qs are still basically leading us higher. And for those that are not aware, 40% of this index is made up of only 5 stocks. So I don't know how you feel about that, but Google, Amazon, Microsoft, Facebook, and Apple, those are the winners. And those winners comprise almost 40% of the NASDAQ. So what we've got, I don't want to call it a broad-based rally because the other 95 stocks are not doing as well. So it's kind of a story of just a select few, the big ones, and they're driving our indexes higher. And until that momentum wheel stops, there's just nothing we can do about it. And in the meantime, we're continuing to see a lot of short squeezes. The short squeeze of the week, I'm not going to be able to talk about it tomorrow, but WETF was 32% short, had a really nice trend line break here and some consolidation going into the weekend. However, we got a really nice gap up because apparently Citibank analysts saw some of the same things we were seeing and gave it a bit of an upgrade. So threw a little bit of a monkey wrench in the trade of the week, but nonetheless still a nice move higher. And I believe that it could continue to go higher based on what I mentioned a moment ago, the fact that there are still short sellers out there trying to short the Qs, trying to short the S&P, and they're just having to lather, rinse, repeat, cover, and start over again. So it's that kind of market until it's not anymore. Path of least resistance remains up. The only thing that could bring this, this market down is some sort of a black swan event that that nobody knows by definition what that could be. So that's what the market's doing. Shorting is not working. Trying to exploit short sellers is working, and trying to exploit short squeezes continues to work. The squeeze 52 alert that I have here. I mean, boy, if we didn't talk about double D, and once again, here's that bottoming tail. Here's that bottoming tail, which a lot of times shows up on my washout bounce. And I say after we see that kind of a bottoming tail on a daily chart, the volatility has been mitigated, and chances are we can have some nice movement up. Well, look at that. It even did it for it twice. A nice bottoming candle there with 2 big candles up, a nice bottoming candle there with some more candles up. So, try and imprint, you guys, when you see charts that have these big, long tails and these washout bounce type events, they mean things. It's a washout of volatility, in my opinion. But back to the alert here, these are stocks that continue on a daily chart here to just make day after day, new high after new high. Because why? These are stocks that are going to 52-week highs with very, very high short floats. And probably one of the dumbest things you can do is stubbornly sit short stocks that continue to make 52-week highs. So we're going to continue to exploit them with some of these strategies and scans until it no longer works. Yes, Ronnie, I would be happy to provide the washout bounce that I mentioned catches those candles on occasion. So while I'm doing that, I'll drop that in the chat window. Anybody else can too. Let me just turn it back over to Jamie.
Thank you very much.
All right.
All right, so we got a lot of cool stuff to talk about here. I was thinking about maybe going out of order here, but let's just go ahead and get the Holly recap over with. Then we'll get into the pack leaders and the stocks like ETRM today, which had a pretty significant move over the past few days. And of course, there's a certain catalyst behind it. And actually, there's a couple of different catalysts, and we'll get into that towards the end of the webinar here. So Holly, as most of you know that are the premium subscribers, Holly last week pretty much just took the gloves off and had some stellar performance. And of course, just like a stock that continues to go up, 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 eventually a little pullback is inevitable. So when we look at what Holly did today, showed up with a pretty thin grouping of strategies today. Depending on market conditions, sometimes we've seen up to 14 or 15 strategies in here. But today, we only had 6, 5 longs and 1 short. We can see them all here. Obviously, sold to you is one of the newer short strategies that's been making an appearance as of late. Didn't fire off any trades today, so it remained tradeless. This guy had 1, but looked like a pretty even spread among the strategies today, 7, 6, 4, 4, and 1 respectively. And the thing I'd like to jump to right off the bat here, and we always like to talk about this, and of course, in the future, hopefully I always like to say this chart's going to be a little bit bigger and a little bit more configurable, but right now it's this little small guy right here. So whether we're looking at risk off today, which Holly was down 38 cents on her total trades, which by the way, when we add all these up, we arrive at 22. So Holly had 22 trades on the blotter, and we'll take a look at some of the individual trades here in just a moment. But what I'd like to point out first here is whether we're looking at risk off or risk on today, there was never really a point in any of these P&L curves that gave us a lot of confidence. So we can see risk off today started red, green, red, fought to stay break even, and then it just gave way. If we look at risk on, same basically opening little dance here, and then red from that point on. So the stat model that is Holly, if the statistical noise is high, this is when we typically get performance like this. When we see Holly, the AI, struggling like this in the first hour, hour and a half, that is when she is acting as the canary in the coal mine. Well, if the stat model is having a lot of difficulty today, that's telling me something. I should be very selective, keep my powder dry, all that good stuff, because today, stat probability is just, it's out there, but it's just not catching today. And once again, Holly is not a magic money machine. She's a high quality information stream, and we can learn a lot from her just by observing her trades and her performance on a daily basis. And of course, the interesting thing about this,
we had a gap up.
Yeah, back here, you know, in the prior week, this is definable. This is predictable for an AI model when we're in this nice little smooth range here. But today we gapped up, which always throws a little bit of a monkey wrench into these strategies. And then, of course, we briefly popped a new high today, slightly above here. So what do we crack it by? 240.32. What was the high here today? 44 cents, so 12 cents before it quickly snapped back. So with the gap up and coming out of this range, kind of throws the model off a little bit because it's been looking for things that have done well, you know, in this period. So as we always say, a losing day is inevitable no matter what type of system you're running. And to see Holly, you know, crank out 22 trades today, be down only 38 cents on risk off, that's a good losing day. Now, I'm sorry, Steve, you...
Well, I was just going to say on that histogram, you know, people were watching Thursday and Friday of last week. There was never really a negative. You didn't really see the histogram go negative, positive, and create a lot of noise in the first hour. It kind of just both Thursday and Friday, you know, the histogram, if I recall, found its groove and just kind of stayed green the entire day. And I agree with Jamie that a lot of times in our observations, a gap up is not the easiest thing for the statistical model to try and get its hands around. And lastly, the thing that really comes to mind is, once again, the canary in the coal mine went flatline about 2 hours into the day. So the first 2 hours of the day, the AI was trying a few things, not working, and then it went to sleep. Now, going to sleep is information. The AI is not seeing things clearly. The AI is not going to make a trade just because it's bored or it wants to or feels like it needs to please its boss. The only way the AI is going to make a trade is if there is a statistically viable trigger that happens. And there was a few of them that triggered early in the morning, but 2 hours after the open, it all stopped and came to a grinding halt. So this is a great example of a day where, you know, the canary in the coal mine shows us that sitting on the hands after 2 hours of the open, there was never another trade made. And in the back of your mind, you should be knowing that, well, if the statistically perfect robot next to me is not making any trades, I better be pretty darn selective as well.
Absolutely. And if we look at that flat line that the risk off put in, that looks kind of like what stocks do sometimes. So when we see a nice consolidation on a stock, you know, what are we doing? We're not just jumping in there and going, oh, it might break out. We're waiting for a catalyst, or we might be waiting for the actual break, and then that's when we become active. Same thing with the AI model here. So it's the statistical model that's going to trade whether the market is conducive or not, and it's going to give you information based on its actions. All right, so let's just take a look at some of the opportunity that was here today on a risk-on basis, and there was really only a couple to talk about here. The first one was MXL. Here we have it on the 5-minute intraday. So we see Holly calls the buy right here. And of course, I've taken the liberty of drawing a line across here, 3106, her entry price as well. And of course, there was a little bit of a wiggle at us, but comes to nowhere close to the designated stop loss. And we can see Holly ended up getting out relatively quickly here. Entry time of 7:04, exited at 7:18. When we look at the reason Holly got out of the trade, profit save. She has the ability to get out. Things are getting a little wicky or volatile. But predominantly, we had to give her the option to get out because we don't want her letting a winning trade turn into a losing trade. So her strong suit, as we say all the time here, it's in the entries. All right, she's not the best at getting out because we're a little bit more, we can read charts from a technical standpoint, whereas Holly is a statistical model for these statistically weighted entries. So being the humans that we are, we participate with Holly here. And we're down a little bit right here, but no sweat, comes nowhere close to our stop loss. Starts forming this little pattern and it slowly grinds its way up. So Holly, profit saved, takes her 10 cents on risk off mode,
For those that don't know what profit save is, it's like a trailing stop. It's raising your stop so the trade will not go negative. We will not allow a positive trade on the AI to turn and go negative.
Okay, so in other words, we are seeing Holly get out of the trade shortly after she enters it, somewhere right around here, and we're like, you know what, I don't think there's really any reason to get out of here. I'm going to honor my stop loss. I like the way this thing's going after that little bottoming wick there. That gives me some comfort. So therefore, I'm going to stay in this trade. I think I can make more than 10 cents on this trade. And that is a classic example of you just deciding to go risk on as opposed to getting out for a dime with Holly. Now, of course, I know that I'm saying all of this and I'm very used to seeing it because I've seen it a gazillion times. But to the new people out there, still might be a little confused because we get the question all the time. A lot of users are under the misconception that they have to pick risk off or risk on at the beginning of the day when that's really not what it's all about. Address it from a trade-by-trade basis and you'll get a handle on it a lot quicker. And so an easy solution is to do a little bit of both. So if we participated with a couple of hundred shares here, we see Holly getting out, go ahead. Plug out of 100 for that dime, set a stop loss for whatever you feel is appropriate, break even, lose a penny, whatever. That way if you do get stopped out of that second lot, you don't give any money back that you made on the first lot. But in this case, and in a lot of cases like this, you can end up booking a profit that is better than Holly and closer to the risk on profit. Steve, anything to add that?
Oops, excuse me. Sorry. No, I was reading and responding to questions. I don't have anything to add.
All right. So
I do like that wick, though.
yeah, I mean, that's a comforting thing, you know, when you see that bottoming wick put in, you start to see this come into play. It's reading the wick, right?
A lot of times, whether it's a 5-minute or a 15-minute, those long wicks, you can call those rejection wicks. And so that rejection wick lined up very nicely to the base support level of that entry.
Right. It's just the intraday version of your washout that you're kind of alluding to earlier, just not quite as severe. The only other one that had about 16 cents left on the bone here would be pets. And so here we go with the entry right here, 34.89. Come on, mouse, you can work for me. And we have kind of more of the same here. Now, what really jumps out at me about this chart is Holly saying, I'm going to have me a little piece of it right here. And then we can see this wick, of course, notorious in the first 15, 20, 25 minutes. Sometimes we get these wide range bars or wicks, ruining this picture perfect chart that could have been right here. But in any case, a lot of people these days kind of ignore wicks, and that's really just a personal preference. So whether you use the bodies of the candles or the wick here, this happens to coincide perfectly with a range break. So Holly's saying buy it. It's also exhibiting a range break, which is one of my favorite patterns due to its simplicity. You know, here we are drawing our line across, penetration through the line or the previous high, range break, coupled with float on, generating the trade, which is coming to us with a fresh squeeze probability of 68%. So I know, hey, this thing has a 68% chance of working, and on top of that, it's exhibiting my favorite pattern. Makes it a lot easier for me to reach up there and hit the F12 button and go, okay, I'm on board here. And of course, we can see a lot of the times once Holly gives a signal, a lot of the times it goes immediately. A lot of the times it'll hover around this entry price, maybe go through it 2 or 3 different times. But in this case, boom, just off to the races. And just a nice, clean trade. So Holly, once again, uses her profit save option. She's using the trade for about 40 minutes here. So right about here is when Holly was taking her 17 cents. Now, of course, we can get out a half, keep the other half, in which case we would have ended up making more than, somewhere in between here. Not quite 68 cents unless we held to the close, but somewhere between 10 and 68 is where the potential alpha is residing. All right, other than that, it looked like our stop losses were keeping us out of worst trouble here
Yeah.
for the day. And, you know, not a whole lot of risk-on opportunity out there other than the MXL and the PETS. So that's pretty much it for Holly today. She's just taking a little break from the marathon that she came in first place in last week. So if you have not been watching Holly, by all means, keep it up on your screen. It's not only a statistical model, but it is a teacher and a high-quality information stream.
Interesting, no shorts fired again today.
Exactly, exactly. That's just simply, I mean, hey, not here to speculate, obviously, but, you know, here we are, pecking at all-time highs. The Qs are already through. Not to say there aren't any good shorts out there, but it's definitely the not the path of least resistance.
Exactly.
All right. Okay. So I'm torn. Do I want to go right to ETRM? I tell you what, let's just skip right to ETRM today, and we'll do pack leaders last year.
Okay.
See how much time we have left. All right. So ETRM today.
Which was being traded in the live trading room. Dan and Barry
Yes.
were on that one today.
Okay. So here we are taking a gander at ETRM long term, and this was the buyout rumor not too long ago. Was that it, Steve? Wait. Never mind.
Sure. Not
okay,
sure.
Okay. So in any case, I think I'm getting this chart confused with another chart with start with an E. But in any case, a nice pullback from these spiky highs here, and then we have what it did not only today, but what it started doing on Friday, right? So all of a sudden the stock comes to life, kind of pops out of that little range here, kind of closes, and then does this today. All right, nice little gap up, and then just boosh, takes a little break, and then heads higher. So we had a low today, looking at 475 and a high of almost 625 today. So what's going on in ETRM today? Well, number one, let's just cruise on over to the earnings channel here. There we go. Okay, so here we have up with earnings. Here we have just a whole channel dedicated to earnings. So if you haven't been watching earnings, and you don't have to necessarily pull up a whole window here, because it's real easy to simply add an earnings column to any top list that you currently have. But this is a great place to always stay on top of, you know, when the earnings are coming out. And let me see here, where'd my other window go? All right, so Alpha Movers is not native here, but this is the window that produced this guy about 15 minutes before the close here. So what I'm going to do here, and this is also just a good way to show people the steps necessary to add an earnings column to any top list. We just right-click, hit Configure, pop over to Search, type in my keyword, and then just click on Earnings Date, show my column, OK, and OK. And then it's going to show up right here.
Why don't you explain how the earnings data is perceived? So 1.75, what would that mean?
Right. So, well, let's take ETRM for the example. Here's ETRM, 1.25. All right, so these are days. The positive numbers mean it's this many days until earnings. So today, ETRM is showing 1.25, which means they report tomorrow. Now, do they report at the open or the close? Not really sure just yet. Now, if you see a negative number, that means earnings have already passed. So CPN reported earnings not quite 11 days ago. It'll be 11 days tomorrow. But right now, it's about 10 3/4 days is when CPN reported earnings. And so negative 0.25, Steve, was that your original question?
Yeah, I just wanted to maybe make people familiar with what that data means and how it pertains to the example we're showing here, which I believe on the channel there, ETRM, move that window over a little bit. It's showing a value of 1.25. Oh, you covered it
Oh,
up
are you
again.
talking about mine this year?
No, no. Well,
1.2.
1.25. So it's showing up. It's showing up on the alpha movers with the
Yeah.
column that he created, and then we go back to the earnings channel where all the focus and the theme is on earnings, and you see up with earnings tomorrow, and the value is 1.25. So if you've got a 1 point something, that basically means earnings are tomorrow. Do me another favor. Can you pull up a copy of the trend change lubricant anyway in this
I
particular
sure can
configuration?
here because
Because
this one has
because
additional.
our friend ETRM is on that one too. So it was kind of a complete triangulation of cross-referencing today with this ETRM, but I think what we're really trying to focus and hone in on here now is using the column and the value of earnings date. Not only is ETRM a short squeeze candidate with showing over 108%, which probably means some chicanery going on in terms of naked shorts, but this thing is short to the brim and then some with earnings tomorrow. So those are interesting data points that we're gaining from the Trade Ideas scans here. And then, of course, the chart tells the story as to people who probably didn't want to stick around for earnings tomorrow, especially those that are short. So you take a high short float candidate like this with earnings coming in tomorrow, and you might be able to corral some more ideas like these in the coming future. So that's the purpose of kind of showing the earnings column here today, because sometimes things start to heat up as they get a day away from earnings.
Right, and just like when we're looking at holly trades and deciding to stay in or deciding to be a bit more aggressive, it's just like the example on the MXL. Oh, Holly's saying it's got statistical weight of 68%. Then the pattern is conducive to what I like, so that's like 2 stars, right? So you can have 1 star, 2 stars, 3 stars, sometimes even 4 stars, and so definitely ETRM earnings are coming up. It's in play based on the action today. Oh, and by the way, it's coming across another one of our highly watched windows for this nice trend change lubricant setup. So, it's a 2-star right now. Who knows? By the time tomorrow rolls around, what's it going to do? Is it going to...
Well, it's going to have earnings, so we don't want to mess around with it too much.
It's definitely something that you want to keep an eye on, right? That's the bottom line.
Exactly.
Keep an eye on it because tomorrow, once all the craziness, the earnings get out, and of course, I always like saying a little bit about earnings because depending on who you talk to, you have people out there that, oh, well, I only trade earnings seasons because that's where all the action is. Then you have some people who say, I don't trade at all during earnings season because it's chaos, it's madness. Stock reports good news, stock goes down. Stock reports bad news, stock goes up. So, if earnings float your boat, that's great. There's one thing that's for certain is that volatility is going to increase for sure, right? So keeping a list of potential movers, things that have that kinetic force in the form of earnings, they can certainly be a good catalyst.
Yeah, somebody's asking for the trend change. Go ahead and keep talking. Jamie, I'll drop my copy in that window.
Right, no worries. Okay, so the whole thing about ETRM is that it's showing up in 2 different, I guess, what we could call, areas of interest. So you all should start being aware of the same thing. A lot of the times, if you notice, hey, something's showing up on this list, now it's coming through my alert window, that means something. It's not rocket science. It's just that if you have 2 high-quality information sources, most of the time, you're not getting any repeats. But every once in a while, you'll get that double verification. So, not a very complex equation. It's just upping the odds a little bit more from that thing doing what you think it's going to do here. So ETRM was one that caught our eye today. Actually, I think our CEO Dan was the first guy to key in on it today. But once he showed me that one and I started looking around a little bit more, this little guy popped up on my radar, NK. And if we see what NK's been doing over the past 4 or 5 trading sessions, not too long ago, we were down there under $3, and today it reached almost 5. Now, let's see, is he showing up on here? Not at this moment. There we go. Okay, there's NK right there. And we can see this little stock has about 5 days to go. So Monday of next week is when that guy's going to be reporting. So might be a good one to put on your radar and see what that little guy continues to do. Nice little energy expenditure here. Little poppy wick there. But in any case, it's a stock that's up significantly over the past 5-6 trading sessions. So might be an interesting to watch on the next open. Okay, so that takes care of the ETRM and another stock kind of similar to it, but not exactly. And now let's talk about this guy right here, the pack leaders, which I've been touting this window for a good while now, and I continue to find good movers on it just about every day, simply because these stocks are in play. Bear with me 1 second here. I opened up my wrong layout there. We'll get back over here and we'll bring up the pack leaders. Now, when I first put this window in play, I don't know, maybe it was a couple of months ago, don't know for sure, but every day it would have about this many stocks on it right here. Well, clearly that is not the case today. I mean, this thing is just chock full of stocks that are not only going up, and by the way, when we look at this list, which I'm not sure how many stocks are being represented right now, but it's quite a handful. And this little guy right here, position and range, where did that stock close? Did it close green or did it close red? And we can see the only two guys that weren't positive on this list today were DPZ and CGNX. So if you're looking for stocks to go up, pretty good list to start watching. And of course, these stocks will start appearing right on the open, and as the day progresses and these stocks pop and get right outside of their lifetime range, and by the way, that's kind of what is driving this whole list here, other than the other basic filtering, is that the position in the lifetime range has to be a minimum of 100. So sometimes they're just getting there, sometimes they're a little bit out of that area, but once again, just a list to start pulling up and going, okay, if I see NVIDIA today set up, and of course if we're told about NVIDIA in the first 15 minutes, then we can start watching NVIDIA. We can watch and see if any good opportunities present themselves, whether that be range breaks or whether that's a 25% pullback from a high that you're seeing right here. So let me reiterate that. Regardless of the pattern that you like to play, this list can be very, very valuable because everybody's a little bit different, but one thing is assured. These are the guys that are leading the pack, so there's a lot of interest in them. And of course, as Steve was pointing out during the market recap, 5 stocks are really what's pulling the NASDAQ around. It's exhilarating and scary at the same time when you think about it. But of course, when we sort by this column here, which sector, gee, look at what's hogging up a lot of the room here: manufacturing in the semis and information. So this is also telling us not only the individual names that are in play, but the sector that they're coming from. Because then you can take this list and start looking for maybe the laggers in the manufacturing, maybe the laggers in the informational sector. This is what's bubbling underneath the surface of the market here. Let me just get rid of that dark background here because the Qs are already out of their box, as we can see here. But as the SPY continues to knock on its all-time high, we're never here to predict. However, I was giving the analogy earlier of the oil well business, right? You have huge companies out there. They've got huge technology that they can examine what's under the ground, ground penetrating radar, seismologists, geologists, all going, yes, there is oil under there. And they might drill 50 wells, and guess what? A lot of them might not hit. So just like tomorrow or the next day, There's no guarantee we're going to pop out of here and go higher, but this is like us doing our geology work and due diligence to find out if there's any oil in the ground. If this is happening underneath the surface and the major index is not out of its box yet, boy, this is a lot of pinup. This is telling me this is what's bubbling underneath the surface, and that's kind of what we do here, right? We take information, we rearrange it into something that makes good sense to us. That's what we do here. So this is definitely bubbling under the surface. Seems like nature might take its course pretty soon here. But this is the beauty in this list. It's simple. It's telling us these are the things in play. And eventually, the market could pop up because there's so much pent-up energy underneath. And of course, I'll take the opportunity to drop this list.
Oh yeah, people
in the window.
People cheering for it.
Before I do that, I want to let everybody know that the list is very malleable. Okay, so this volume today percent. If you're also wanting to keep tabs, okay, these guys are, you know, this setup looks good, but what's the volume? We can use volume as a percentage. Of course, when you see 100 in here, simply means the stock's already at what it normally trades for an entire session. Of course, we've got a lot of other volume metrics, but just to give everybody an idea of how I'm filtering, because you'll notice there's a lot of big stocks on here. Of course, these are the ones popping out, but we can always duplicate the list, and you're like, well, I don't really want to trade these high dollar stocks. Well, we can easily come in here and modify the market cap instead of saying, you know, those are good, but let's do this. We cap it at 2 billion instead of saying 4 billion minimum. How would that change things up? Okay, we still got a nice little list here, and look, looks very similar to the other list. Most of these guys finished green today. Only one is red. Might change up the sectors a little bit. You know, of course, there's manufacturing again, but lower price stocks, if that's what you fancy. But the functionality remains the same.
Well, make sure you give them the original one, not the one that you just made.
Correct. I'm going to drop this one in as we speak. It was not to forget about it.
You might even just go through the drill. I know there was a couple people that asked, what do I do with that link? Maybe after you drop it in there, maybe go through the drill of clicking on that web page, showing them how to copy the URL and go right to Trade Ideas to load it.
I would do that in one split second. Okay, so everybody, that is in the chat window now. Of course, I think I can highlight and copy right from that chat window.
You can just click on it. It'll open up a.
So whether you highlight this thing and copy it, or whether you click on it, when you click on this guy, and of course it pulled up my mystery browser, it's going to direct you to this little instructional web page.
You see the name, Pack Leaders.
Right here's the name, top list window. So all we do is we copy this link. We right click and we say copy. Once we say copy, we just find our Trade Ideas toolbar right here. We say load from cloud. It's automatically going to populate in the field down here. So all we have to do is click load, and voila, you will see the window spawn, and then you can position it accordingly, save it to the cloud, make it part of your default layout. But watch this window. I think you'll find it very interesting. All right, so just a quick time check here. We're looking good on time, Steve. So when we have a little bit of extra time, we always like to take the opportunity, and let me just make sure here before I transition to that we're not missing anything here. I can find my cheat sheet. And I think we've got just about everything covered that I wanted to. So at this point in time, what we're going to do is just open up the floor to any general questions about anything, or maybe if somebody wants us to take a look at a couple of charts. What do you think, Steve?
Sure, we can do that. Charts are always fun to look at, or if somebody's got just a basic how do I trade ideas, technology platform question to make the window do something or a symbol do something. We've got 5 minutes or so to answer some questions. Can Jamie share the scanner labeled?
I saw that. Yes, I'm going to drop it in right now.
Alpha movers. Thank you. David is asking about Renko bars being any better than candlestick bars. I've only always used candles, so I'm going to be an old dog and not even make an attempt to try and make a distinction between the Renko candles you're asking about. I wouldn't be the guy to ask that for sure.
Yeah, I don't think I'm going to be much good on that one either. There we go. There's alpha movers there. Candlestick patterns, how long have they been around, Steve? I mean, they were invented by
Japanese rice traders hundreds of years ago.
Right. So that brings up kind of a good point here is that, charts are the universal language. They are the footprints in the sand, but they guarantee nothing. So we have to throw a little bit of extra stuff in there in the form of trade ideas. Working in conjunction with the charts seems to be, kind of the best combination. And of course, saying this myself as well as Steve with a little over 20 years experience staring at these screens and these charts, there is no magic bullet. We need both. It's just like when we work with Holly. Man with machine is really the best combination, what we call the chimera, letting her bring us the high probability statistical entries and letting us be a little bit more active in managing the exits. But yeah, really not a connoisseur of candles. Steve's a little bit better at that than me, but the differences in them.
Somebody's asking about TSX. Now, there's kind of a caveat on the TSX market. We get data, we get prices, we get alerts that go off.
Yeah,
okay. No, but that would be it would be in the configuration of any alert that you have under the Exchange tab. You'd want to go to the Exchange tab and enable TSX. But here's the deal. You may find some holes in the volume, the way the TSX data exchange reports to us. Sometimes there's some holes in the volume, so you've got to double check and confirm volume metrics from your broker in a sense, but that's the way to do it.
Here's a good example is I'll remove all the markets from this box and I'll check TSX. Look, nothing even on this list. So kind of hit and miss because the Canadian exchanges are a little bit more strict as to the data that they will let us rebroadcast.
Who is it here that's asking me a good question? Hang on a second. Christopher, if you never traded before, how would you go about getting started? Well, I actually jumped the gun. I thought that you were asking about the product. I'm going to go ahead and drop that video in there anyway. It's a 1-hour getting started webinar. I'll send it to everybody. That'll get you started on basically the concept of using trade ideas. Getting started trading, you can start just about anywhere. Books, Twitter, stock twits, finding people that that are good. The live trading room we highly recommend. I'll drop a link for our live trading room here into the chat window. But just remember, trading is not something that is gained overnight. The skills come from a lot of trial and error, and one of the best things you can do and the best advice we can give to a new trader is try and make your mistakes cheap as you're learning this game for the first few months, because it's very, very subjective. There's no one right way or wrong way to do it. So hopefully that makes a little sense. What did I just drop in there? Hang on one second. I'm dropping this into the chat window. Dropping into the chat window the live trading room, which is a great place to start, just watching, learning, and trying to absorb what's going on.
Yeah, and really you've stumbled into a very good place to learn trading from the ground up, because with the trading room and all the experienced people in there, along with the advanced technology that we try to demystify in these webinars and in the trading room, you've stumbled onto a pretty good place. I mean, Steve and Dan and Brad and I always joke about, man, I wish we would have had this environment to stumble into when we were banging our noses and faces into the brick wall, learning to trade. But then again, that was a different time, and we've taken our experience and created this environment. And of course, pushing the envelope, trying to change the game up, make it a more level playing field for the newcomer.
Favorite book? Well, there's a really, really, really good book that was written over 100 years ago, and that's what makes it so good, is it's not focusing on the technology we have today, but the psychology behind it. It's called Reminiscence of a Stock Operator by Jesse Livermore, a true story of a guy who was just an amazing trader. Did you have a book recommendation that you liked?
Steve, I came into the trading market in last part of '95, and I was a broker before that. So back then is when I started reading a couple of trading books. I remember New Market Wizards was one of the ones that was more popular back then. But it's just like I found trading books to be just like any other how-to book, like how to play golf, right? How to bowl, how to bet on sports. Look, go to Google and type in books on trading. How many are you going to pull up, right? So, educating yourself on other people's techniques is always a good thing. The more you can learn, the more you can, expose yourself to, the more information you have to figure out, well, what's valid? What means something to me? What doesn't mean something to me?
I'm sorry, I thought you were done. I'm dropping another title. I'm dropping another title in there. It's called Trading in the Zone. That doesn't so much focus on candlesticks and charts. It focuses more on between the ears, because a lot of the traders in here that are active know that we know what we're supposed to do, but what comes between the ears sometimes can get in our way. And so Trading in the Zone is a way, it's a psychology book of getting your head straight and keeping things in perspective. And I think that's a timeless book in and of itself, so I'll recommend that one as well.
Right, and that kind of ties into the whole thing here. It's a mental game,
Douglas.
Right?
Yep.
So finding a simple pattern and a simple setup, that's kind of the easy part. But adhering to your rules and not getting psyched out, that's the kicker. So regardless of what appeals to you, the psychological ramifications are definitely something that you're going to have to contend with.
All right. Okay. Yep. Best advice for building a small account? Well, to start off with, there's the pattern day trading rules for a reason, which you probably know all about. So it kind of forces you as a new trader to not go crazy and come in with pattern day trading green light and just trade 20 or 30 things a day. The best advice is maybe using the pattern day trading rule and making sure that you have a 5-star trade if you really want to waste one of your allotted trades to do so. And so it forces you to be a lot more selective. I also highly recommend, if you have the price alerts with the Trade Ideas Premium, if you don't have price alerts, your broker probably has some sort of a price alert, but start setting them. Start looking at charts and start setting alerts and having these things pop up in real time as those alerts are triggered, and then seeing how they trade, paper trade or even small share size trade. But that's another way to try and start to develop your confidence, is setting things up ahead of time. Set it, forget it, and let it wait and come to you.
Right. I was checking out the question David just asked, why we stick to equities versus futures. Well, the short answer is that every day there are over 8,000 tradable securities, where in the futures markets, how many instruments do you have to trade? Whether it's Forex, futures, E-minis, right? There's only a handful of products.
Yeah, not much.
There's just not so many fish in that ocean where, with a gazillion different setups that people look for, with 8,000 candidates out there, that's just where the hunting grounds are fertile for what we do.
I'm getting some feedback that YouTube channel's not working in the comment section. So what I'm going to do is I'm going to drop it into the chat window, because I want to make sure people get a hold of this. I'm going to title it YouTube 1 hour getting started. Control V. Hopefully that helps. So yeah, just to add on that last answer, Trade Ideas catalogs and databases, over 8,600 stocks, I think, in the U.S. market, and every single day, the database is going back 3 months looking for anomalies. So if you can create baselines for 8,600 different instruments, chances are every day of the week we're going to have some ideas pop up that pop out of their baselines, and that's the uniqueness of Trade Ideas. So far, 7,100, huh? Okay, we'll go with that.
Well, I still had some filtering on there, but it's usually right around 8,000. But in any case, lots and lots of things out there that might do the thing we're looking for versus a handful of instruments. All right, Steve, checking it out. We got about 5 minutes. I guess it's a good time to maybe take one question.
Okay, we'll take one more question, and then you can walk him out on those slides that Scott normally does. Could a scan be written to display the stock based on where they are related to the sector or the industry? I don't think we have a position and industry range. We have wonderful position and ranges to see where prices are in the day range, a 5-day range, 20-day range, what have you. But putting together them in terms of how are they performing relative to their industry group, don't have anything like that, unless you want to correct me, Jamie.
Well, true. You'd have to go to something like what I just did here, the sector channel, right? You know, we can give you a peek as to which sectors are doing what, but as far as the sector versus the individual stock, you could create a top list, you know, and you could load it up with the sector index and all the individual names so that you could quickly see a snapshot and go, oh, okay, position range on this one is red.
Your financial window and your gold window and your oil window.
And of course, we do have some alerts for that. We have the sector divergence, which, let me just real quickly here get a new alert window up, and I'll point that out because that's what this filter is designed for. Or excuse me, it's an alert. So positive and negative market divergence, but if you're just looking at that sector in a custom list, it would just be for that sector. So this alert will, you know, will do that for you, negative and positive market divergence.
All right, one last question that's worth answering is any wisdom on using leverage? And I replied, yes, it cuts both ways. That would be my wisdom.
Yes, it can really do you a lot of good, and that can also exacerbate the pain. So I guess that's pretty much it with leverage. Yeah.
All right.
Okay, gentlemen. So once again, thanks for attending. Before we let you go here, just want to make sure everybody's aware of the podcast that we've been doing on Fridays. It's downloadable. It's usually hosted by Dan Merkin, and I ride shotgun with him a lot of the time, and sometimes we'll bring in some guest speakers, so we try to keep it interesting. So if you haven't been doing that, you might want to catch podcasts. Also, too, real quick blurb about the Brokerage Plus IB, or the Brokerage Plus for IB. It is live now, so it enables people with an IB account to view their positions and trade through our add-on mechanism here that we've created. And also, one of the cool things that it allows you to do is if you backtest a strategy that looks really good and you want to put that into autoplay, the Brokerage Plus interface can do that for you. It's in beta test right now, so that means it's free. If you've got an IB account, you can access this immediately from your TI toolbar just by going to New and then Brokerage Plus. There's also an instructional video, so if anybody wants that, email us at info@tradeideas.com and you can get that video or just search for it on YouTube. And just want to let everybody know there is a promo code that you can use right now at checkout, the Office, all caps. That'll give you 15% off your first month or annual subscription. And of course, the basic package that we always offer is the $99 a month. But of course, if you want access to the premium aspects, which include the AI, price alerts, that is the premium package here. All right, well, you can follow me at QuantBot. You can follow Steve at The Day Trader. You can follow Dan Merkin at Trade Ideas 1. You might want to check us out and like us on Facebook. Of course, you can always reach out to myself or Steve directly. I'm jhodge at tradeideas.com. Steve is Steve at tradeideas.com. So that's about it for today, guys. Thanks again for popping in. Steve,
No,
anything to add before I
no,
let everybody get back to the day?
no webinar tomorrow, but I'll see you next Monday and Tuesday on the Trade of the Week next Tuesday. But Wednesday, Thursday webinars are still intact.
All right, Steve, well, have yourself a good time in the Windy City, and we'll look forward to your return.
Thanks. Talk to you later. Bye-bye.